everybody. Welcome to this week's COVID-19 Shared Mobility Briefing. My name is Justin Kozak from Founder Shield. We're an insurance brokerage based in the US, writing business in the United States, Canada, the UK. We represent our clients and help them structure a risk management program with a specialty in the mobility space. And I'm happy to have Flavia from Apollo join us. Apollo is based out of the UK. They're one of our preferred underwriting partners and the leader in writing insurance in the mobility space. So I'll let you introduce yourself and the Apollo team.
Hi everyone, and thanks for having me, Justin. So my name is Flavia Di Mattia. As Justin said, I work in the Apollo team, and specifically within that, in the iBot team, ensuring businesses of tomorrow today. So in the iBot team, we focus on sharing economy insurance and in particular micro-mobility insurance as well. I've been in the insurance space for 8 years, and the sharing economy space is a really interesting place to be in terms of insurance.
Great. So this is, you're a perfect guest for this conversation. So what we'll get into today, and we'll jump right in as we want to keep it somewhat short and digestible, but we'll have a few risk management and insurance questions for you. Hopefully the audience here will be able to gain insight into an underwriter's mind, kind of understand how the insurance market works in relation to mobility. So the first question, and one that we've gotten a lot actually, is how do you see and what are the differences from an insurance underwriter's perspective between, say, a micromobility company operating a fleet of scooters versus bikes versus mopeds?
Sure. So if we keep mopeds separately, so mopeds, depending on the engine size, can be classed as motor vehicles. And this means that they are regulated differently. And in particular, the insurance they would require in that case is auto insurance as opposed to general liability. So this means that for us, the underwriting considerations are very different as the coverage is different. And they would also be subject to protection from the Graves Amendment, which is not the case for bikes and scooters. So if we move on to bikes and e-scooters, these are also different risks to each other, in our opinion. So the first thing is that obviously the experience is very different. So if you think of a bike, for most people, it could be a rite of passage to learn how to ride a bike, and they might have done this for years and be very proficient at it. Whereas e-scooters are a relatively new form of mobility. So to us, they are an emerging risk. And in fact, the majority of accidents and claims that we see are within the first 3 rides for a user. And the type of accident and claim severity is also different for bikes and scooters. So if you think of the height for any fall, it would be different due to the different proximity to the ground. And it's also a lot easier to disembark a scooter as opposed to a bike. Also, the weight of the units is different. So bikes are typically a lot heavier, and this causes higher levels of damage or injury if a collision was to occur. So these are all things that we keep in mind when underwriting bikes as opposed to scooters.
Okay, so moving on to the second question, more granular about the policy itself. How are policies rated, and what are the importance of projections? We as a broker ask our clients a lot to provide projections for a variety of things such as revenue, minutes, miles. Why is that so important to how the policy is underwritten and rated?
Sure. So at Apollo, we strongly believe in usage-based pricing. So this means that, for example, if we charge a rate per mile, the ultimate premium of the policy will be based on the final mileage at the end of the policy period. So the projections are important for us to have at least an idea of how much exposure to risk is going to be incurred over the policy period. But then typically the rating would be adjusted based on usage. But one thing that's very important to note is that we do rate using a variety of exposure metrics. So I've mentioned per mile, but we could also look at per ride or per minute, for example. And this depends on how an individual operator runs their business, but also what data they collect and report on. Revenue is another example of exposure metric, but we don't tend to use this as much because it's not as reflective of the exposure, given it's based on the cost of using the unit per mile. And if the cost changes, this wouldn't necessarily change our exposure to risk. So we really like it when operators are comfortable with their exposure metrics and are able to have at least an idea of how to project them into the future. But particularly, this is ideally beyond one single exposure metrics. So operators should look to collect as many different factors linked to their exposures as possible. This can give them valuable insights into their risk, but it can also be impactful for insurance pricing. So for example, if you only capture the number of rides and not the mileage, this won't give you an entirely accurate reflection of the risk. And this is because, as we mentioned before, it takes time for users to get comfortable with the operation of a scooter. So a lower average mile per ride will mean a higher risk than a longer one. And there are other factors too that can be insightful linked to exposure. So one that is crucial for us is recording the rider experience. So obviously a person who's ridden a scooter 5 times or less poses a much higher exposure than an experienced rider that has used a scooter 20 plus times. So at Apollo, we rate all these exposures differently and try and put them together, and having a good grasp on the various types of exposure can actually result in a better reflection of the risk and hence a more economical pricing.
Got it. Makes sense. Makes sense. And one more question, and we'll let you go. So the last question here, and of course, a question tailored kind of towards COVID and the pandemic that everybody's living through. But we have received a lot of questions about this as well. Companies are looking to possibly pivot and change the way they do things as a result of the pandemic. What are the implications from your perspective as an underwriter of, say, a fleet that wants to move from B2C, renting to individuals with maybe a public share type of model, to B2B, for example, allowing food delivery workers to use the scooter or the bike for more of a commercial use?
Yeah, so this is really important from an insurance perspective. So it's important that if you're thinking of moving from B2C to B2B, even for a short term, that you inform your insurance carrier or your broker. And the reason for this is, to your example of a scooter fleet with an active policy wanting to allow delivery workers to use the fleet. Most delivery platforms will provide insurance to the delivery person while they are on active delivery. And this would cover them if they were walking, cycling, driving, or riding a scooter. But note that it will cover for their liability, so injury to a third party, and it's unlikely to cover them for first party injury or damage. And that risk, if the legal liability can be established, would fall back to the scooter operator. Rider liability is a product line which is being explored in the US, and it's also covered in some international territories. But basically what I'm trying to say is, where it would be provided, there could be a crossover of coverage between the scooter share platform and the delivery platform. And we've seen this already in vehicle leasing. So telematics is really crucial here, because it allows us to ascertain the exact time of any incident, and therefore whether it's the platform that's responsible for the loss arising from an occurrence, and which insurance coverage should apply.
Got it. Makes sense. So most important thing, communicate, talk to your broker, talk to your provider. But thank you for the insight. So this was really great. I appreciate your time, and that about wraps it up.
Thank you very much. Thanks for having me.